should be live very soon. Look at that, we're much bigger in here now. There we go. Looks different when you go live. And I think we're live. It says we're live. So, hey guys and girls, welcome to this week's episode of Tuesday Night Live with Facebook. Thanks a lot for tuning in. I've got a couple of guests with me today. I've been bringing different people on. Once a week, once a fortnight, have someone different on. A lot of people think, B.Invested, they sometimes refer to Nathan Birch and all that sort of stuff, but we're much bigger than just a team of myself and a couple of people. We've got hundreds of staff here, and today I am blessed to have two of my team members here. So I've got Rose and I've got Dinisha. So we might give a little bit of introduction just to yourself. So what do you do, Rose?
Well, I have been a mortgage broker for 20 years, and I'm the head of Zinger Finance. We are a team of 12, and out of those 12, there's 4 brokers, and the rest is broker support. But those broker support are very experienced broker support, and they are the one that basically we work closely with the broker support and the clients and the bank, and there's always someone there for you.
Rose, you were my broker as well for about 20 years.
Yes.
About 20 years, and we've got Dinisha here.
Yes, so I am a mortgage broker. I've been mortgage broker since 2019, but I did start work at Zinger Finance in 2017. So I worked as a customer service, and I worked my way up to broker support, and then in-house mortgage broker. So I have been writing loans ever since.
Awesome. A lot of people, watch here and see our testimonials and stuff like that, and they want to know, how do you get the deals? How do you build large portfolios? And I always say it's not just about the property. Property is half the equation, but if you don't have the loan, you don't have the structuring right, you can't get the loans, you can't buy the property. So very, very important. And today it is, I only found out this earlier, Rose, it is your birthday. I've got the little birthday man behind us here, but I have something coming in for you, Rose. So everybody that doesn't realise it is Rose's birthday. So we have a cake for you, right?
Oh, thank you.
So you've had a few cakes
awesome.
already. You didn't realise, but I made sure
Yeah.
that we had a cake. So
Yeah.
we'll sing happy birthday to Rose. So happy
Happy
birthday
birthday
to
to
you.
you.
Happy
Happy
birthday
birthday
to you. Happy
Happy
birthday,
birthday,
dear
dear
Rose. Happy birthday to you. Hip hip.
Hooray!
Hip hip.
Hooray!
Hip hip.
Hooray!
Now you got to blow out your candles, Rose. Make a wish too. There we go.
Thank you. I didn't expect that.
I know you didn't, but it's been
Oh
a
my
few
gosh.
times today, and I had the team go and your team go and get that today, Rose. So
Oh, thank you.
Yeah, just want to do a little cake and share the love and put it out
So
there.
you guys are very special. See, on my birthday, I'm here with you.
Exactly. Like I was like, wow, like it's you could be at home with your family, you could be doing anything today, Rose, and you chose to be here and be on live and answer questions from the community. And
Can I also say happy birthday to Di Milda?
you can.
Di, happy birthday. We got the same birth date.
I don't know if Di's watching today. She might be, but we'll
Well,
send it to her
okay,
later.
yeah.
So awesome. Well, what I normally do, ladies, like I know that you watch sometimes you don't. I'm always here, and I don't know what you watch as much as what I put out, but I always go through some articles, and today I was going to go through a really big articles, but I'm going to do that next week. I've got a very special topic for next week as well, which is called What the Fuck Happened in 1971. It's actually a website. 1971.
I remember 1987.
I remember 1985. I was born then. Well, I don't
remember
really.
1995.
Are you 10 years younger than me? There we go.
Am
I don't know, 95?
I'm 95.
I'm 85, so there you go. Only a decade difference. But there's a website called WTFhappenedin1971.com, and next week I'm going to be talking about that. But today I've got a few articles here to share with you guys. So this one here is from news.com, This one is an article that came out the other day, and it says Australia's buy now, pay later provider Zip reveals a $1 billion loss. And over the years we've seen booms, we've seen busts, we've seen things going on, and I said to everyone, we're going to see a depression of biblical proportions. Remember me saying that to you, Dinisha? Yeah. And people are like, when's that depression going to come? I said it's going to either be a depression of a recession or a depression via a hyperinflation, and I think we're going to see both of them. And the only way for them to stop that depression from coming is to keep printing money, and they've done so by making these afterpays, the Zip pays, and all that sort of stuff. And I find it interesting here because people always ask, especially the finance team, how high will interest rates go? And these guys can't speculate; they don't give you predictions like I would, but I always like to break it down and just think what's possible, right? What's possible. Yeah. So if interest rates go up any higher, well, everyone is going to go broke, right? The Zip pay, we've seen interest rates rise not even 1.5% yet. We've only seen it go about 1.75%. And we've now seen these, you buy your shirt for $10 and you put it on, you buy it today and you wear it and you pay $2.20, $2.50 per week. And people are already going broke. So this article says Australia's buy now, pay later Zip has hemorrhaged money from its operations, revealing a whopping $1 billion loss for the past financial year. The Afterpay rival announced it was closing its United Kingdom business as a part of a move to stem its losses. It comes as experts predicted potential carnage for the BNPL, buy now, pay later sector this year as providers burn through cash, bad debts balloon, and customers retreat from using the service, a model which they say isn't sustainable. Zip's huge losses, including a big jump in bad debts as well as higher operating costs, reflects a chilling warning from experts that buy now, pay later providers are at risk of becoming a loss leaders and wholly unprofitable. The company's bad debts, which was forced to write off, more than doubled from $82 million to $228 million, but the company said its tightened lending believes that these debts have peaked. It's also reported that an $821 million loss of its goodwill, so when we add 228 and 821, it's $1 billion. $821 million loss of its goodwill and intangible assets in the United States, UK, Europe and Middle East, with the company now running a strategic review of its overseas operations. Europe and Middle East are burning through about $50 million a year, its results showed. Anyway, won't go on to bore everyone, but that the world is fucked when people buy their t-shirt, they buy their KFC, they buy whatever, and they buy now, pay it later, and it's for $10 items, $20 items, and now those companies are going broke. So they're just Ponzi schemes on top of Ponzi schemes, on top of Ponzi schemes. I'm talking about a big Ponzi scheme. Let's move on to our next article, which happens to be from news.com. This one's very interesting, right? This one here says the alarm in China as Huawei, or whatever you call it, Huawei founder warns of a painful next decade. The founder of technology company Huawei has sparked alarm in China after warning about a very painful decade ahead. The founder of the technology company Huawei has sparked concern, just repeating the same thing. He forecast that China would suffer through a tough market conditions and indicated Western sanctions were threatening the conglomerate's existence. So beforehand it was Corona, then it was shipping issues, then it was a war in Ukraine, and then it was a food shortage, and now it's just because of transitory inflation, but now it's because of Western sanctions upon it. The founder and CEO of the Chinese phone company Ren Zhengfei sent a blunt company-wide memo to staff earlier this week, according to local media. In the message, Zhengfei warned that Huawei was simply trying to survive by focusing on cash flow and profit, and expansion and growth was no longer a priority. Oh wow, doesn't sound like a recession there. A recession is a contraction. The next decade will be a very painful historical period as the global economy continues to decline. Well, it won't be declining for a decade because it's just going to print more money and burn through that. Huawei must reduce an overly optimistic expectations for the future, and until 2023 or even 2025, we must make survival the most important guideline. This is one of the biggest companies in the world. Probably half of the devices you're watching this from have parts from this company. So for them to say that they're screwed and there's a lot of problems that are going on in the world, this to me signals a big, deep recession, and we're seeing signs of a recession flow through. Every day there's something going on, there's someone going broke, a zombie company exploding, and what are they going to do to fix it? We've seen Corona come through, and they basically just printed a lot of money and papered over it. Now they can't even raise interest rates, so it's a very interesting proposition. And this isn't something today that we're going to talk about interest rates and go into that, ladies. I might have a couple of questions surrounding that, but it's common sense, I think, for everyone to be questioning and thinking, okay, what options do they have left in their toolkit to contain deflation, to stop a recession, and what triggers will they pull? So my last article here is one from realestate.com.au. This one is really, really fun for you, ladies. This one goes, calls for APRA to ease lending buffers as borrowers become trapped in their own mortgage. So this, I don't know, have you guys seen this? You seen this article? Yeah. So this article here from realestate.com, as interest rate rise and property values fall, there are concerns a growing number of borrowers may no longer meet the stress tests that allow them to refinance. It's known as a mortgage prison, where borrowers are stuck in an existing home loan due to inadequate equity in the home, often as a result of falling property prices or because they don't meet serviceability criteria to move elsewhere. According to industry experts, the latter is becoming much more prevalent. Since October, the Australian Prudential Regulatory Authority has required banks to assess whether borrowers would still be able to meet their repayments on interest rate is at least 3 percentage points higher than their initial mortgage rate. The buffer was increased from 2.7 previously. Ben Kingsley, director of a wealth company, said that the APRA should ease those additional measures immediately. Taking it back to the pre-scandemic level of 2.5% immediately would be sensible, but also exploring taking the rate down to 2% buffer would also be sensible in the event that cash rates goes above 2.5 towards 3%. So basically there's articles now coming out saying that the finance markets and the financial markets that we're used to, people are getting trapped. So if you've got households with $1 million house and $1.5 million mortgage, that's where the pain is going to be felt. If you've got a mortgage for 200 grand or 150 grand, or you're buying a property at the lower end, there's still a large upside for people to be able to afford that because the affordability is strong. But when you go to the higher end, where the risk is surrounding the market, that is constrictive. So interesting and exciting things. So I find that just more and more, I'm still very convinced that we will see a massive recession in the next quarter. We're entering into a new quarter. We've got September, October. Actually, no, it's not. September, October, November, December. Yeah, we've got still a bit left. Yeah. But I think that when we start seeing over the course of the next 2 months, as we enter in October, November, we're going to see some interesting stats coming out from companies on the stock markets, whether it be the Dow Jones, ASX and whatnot, as they report massive losses coming through, and that will lead us into a bigger recession than what we already have. And I'm still confident that we will see rates come down. So on that note, talking about interest rates, talking about finance, I'm going to leave it over to you two ladies to talk about certain things. And who should I start with first, Dinisha or Rose?
Dinisha, you can start.
I've got some questions for you.
Do you?
I do. Yeah, I've got a few little questions. I don't normally ask questions, but I thought, I'll ask some questions today to Dinisha.
Okay.
A few people, actually, here's a question or a comment, right? Some people, no one really likes my rat's tail. I'm actually getting people to like my rat's tail now. They're like, Nathan, don't shave it off, keep growing it, it's cool, right? Rose is trying to cut it off there. But I recently said to Dinisha, I was like, and she's like, mate, you got to do something with it. And I've got my Zinger coloured hair tie today, and we've got a plaited hair. So Dinisha, thank you for plaiting my hair, right? You're full of talents. And
my pleasure.
But one of your talents is building large portfolios for our investors, and
Yeah.
you know, if someone doesn't have finance, they can't do anything. I guess maybe just if you could share and open up with the community just on perhaps some of your first sort of client success stories that you worked with many years ago now.
I do have a lot of success stories, which is a good thing.
Yeah. We
but
can't name names either.
Of course, definitely.
Of course.
No,
You know
no
compliance,
names.
no need for that.
But one do come to mind is that I've done a land loan.
A land loan.
Land loan.
Okay.
So this client wanted to get a land loan for PPOR and principal place of residency, and want to use that to build and live in.
Yeah.
Due to or their finance position, they can't service for a land loan, and it's basically $500,000.
Okay.
So we tried with the smaller lenders, and we tried applying loan with a land loan basically, and unfortunately not all small lenders do land loan.
Yeah.
So if they were to do land loan, there's a restriction of 90% LVR.
Yeah.
However, the client couldn't service for Genworth servicing.
Yeah.
The client could service with the normal bank servicing, but the client couldn't service for Genworth.
So what Genworth is if someone's going to mortgage insurance,
Mortgage
yeah?
Yes,
insurance.
Yeah.
yes. Even the client is trying to apply for 80%, but the policy is that they have to service for 90%.
Yeah.
Yeah. So eventually we couldn't do it because the client was failing servicing. So what we did was we tried to refinance some of his properties,
Yeah.
and valuation came in good. He could service with 80%, and we actually managed to use the cash to purchase the land unencumbered.
There we go. Giddy up.
Yeah. And
Yeah.
and now, he's able to do construction, and now he's living in his house.
There we go. So it's all built now, yeah?
Yeah.
Cool. And
It's all done now.
that's land, right? Like
Yeah.
I know every single day, right? Like when I walk in the office, it's like, what do you think actually when I walk down? Like we've got, I don't know, how many people are 40 people in this level in
Yeah.
the office, 40
40.
people in the office. I come walking down the hallway, and I'm like, the Zinger team sees me and they're like, oh fuck, Nathan's coming, right? What are you thinking when I come around?
Because I know what you're gonna ask.
So the question I ask is, who's
And
ready
you
to
don't-
go?
You don't come in the morning. You come at 4 o'clock, 5 o'clock.
Yeah, we just have all day to think about stuff. So I've got you right in the middle of working.
No, I mean, because I know what you're gonna ask, I automatically know the clients, and like who's able to purchase, who's able to grow their portfolio. So
Yeah.
it's a good thing actually, because you're wanting to
Know what's going on.
yeah,
right?
know what's going on, and help clients and build their property portfolio.
I
you
see
know.
every single day, right?
But I do try to run away.
You do try to run away. You do every day, right? But I know that you've always got like 5 people's files, 10 people's files that you're working on, like on your computer, right?
Yeah,
And you're still working on them. And I see, because our clients are very, we're doing the deals, you're running the loans and whatnot. I see the intricate things that you do, right? Like the ability where people don't service and how to, help them, little things, right? Like whether it be closing credit cards or
Yeah.
their debts and stuff like that.
Every little thing counts.
Yeah.
With the client's position, it could be, as you said, simple as closing a 10,000 limit credit card, or simple as closing, like a car loan, or even hex debt.
How much if I had what's an average credit card someone has? On average?
15,000.
If someone had a 15 grand credit card, how would that impact their servicing, like roughly?
3%.
Yeah, 3% of the limit.
That will be 3 to 3.5%.
So what does that mean? Like I don't even know.
So for every 5,000, there will be 150 already commitment every month, right? So
Yeah.
for every 5,000 credit cards. So if you get 15,000, that will be 450.
And then they do 3 times that. How-
3% of the credit limit, they will allocate. That will be your monthly commitment.
Yeah.
Okay. And then, so if I've got a 15 grand credit card, I'm spending $450 per month on repayments on that. That's about, say, 5,600 or something per year. How badly would that impact? Like, what couldn't I borrow for now that I'm spending $5,000, $6,000 a year on credit card repayments? How much would that impact me on average? Would it be 10 grand on my home loan, 20 grand on my home loan, 100 grand on my home loan? Roughly. Sorry to put you all on the spot.
Yeah,
I have no pressure.
You want to answer that? For a 450 commitment a month, right, to close a credit card, it could probably do 100,000 loan.
100,000 loan. So if someone had a
Depends
15
on
grand credit card, yeah.
obviously yeah.
There's so many people that watch our Facebook Live and watch us on YouTube and in the community that will be sitting there going, I wish I could get an extra bit of, loan. I think it's important that people see this stuff.
Yeah.
And it's
But also, wanted
Rose,
to add,
your phone.
wanted to add that sometimes the client thinks that just because you have a credit card and you don't use them, it doesn't affect
But you have the
service.
ability.
But you have the access to get 15 grand. So, anytime you want. So we have to declare that as a debt, as
Yeah.
15 grand, even if you
If
don't
you owe
use it.
like $500 on a 20 grand credit card, they take the 20K.
They take the 20, even
Yeah.
if it's not if
Yeah.
it's active, you don't use it. We still have to take
Yeah,
that.
it's
Yeah.
always at a credit limit because potentially, obviously, you can use it,
You can
right?
use it,
Nothing
yeah.
stops you from using it.
Yeah.
Mm.
Cool. And like, what would be your largest sort of portfolios that you have? Like, roughly, like how many properties would someone have?
28.
28. Yeah.
I
Okay.
think
Yeah, I know who that
Yeah.
is. What other ones do you have? Like, do you have many people with more than 10 properties?
Yes.
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 There we go.
A lot.
I think 10 is the average we have at the moment.
That's the minimum.
yeah.
But
You
yeah,
start with
do
people
have-
with like one property with no property. How many people
Yeah.
would come to you with no properties on average? Like, say, if you had a percentage, how many people would have no property when they come to see you?
like 20.
Well, we have a lot of good stories where when they come on board, they only have their home loans, right?
Yeah.
Mm.
So, my God, I can tell there's so many of them. We
Yeah.
start with just a home loans. We harvest the equity from homes and then use that to purchase the investment property, and then just keep rolling. Then we harvest equities from the investment that they have purchased,
Yeah.
and then buy another property.
So when you've got 28 or you've got 10 or you've got 15 properties, are these people coming to you with 15 properties, or are they coming
No.
to you with
Mm.
none,
I
or
have,
one or two?
I know one,
Mm.
two.
Yeah.
One or
and-
two people that have got
Like
The-
the for
that came to
example,
you
the,
with the large-
yeah,
yeah.
like client came with me with
The
one property
newcomers, yeah.
and now the client has like 11 to 15 properties, and
Yeah.
it's all through Zinger Finance.
Yeah. So when it comes time to building a portfolio, it's the property's one thing, right? And I workshop every day. Like, I sit there with Dinisha and I'll quiz her, right? Like, we'll have 10 people or 5 people I'll come to you with and say, hey, what can we do for this person? What can we do for that person? You'll be working on their file. You'll be like, they might be stretching at servicing, and we'll be like, what about if we add an extra $300 a week but only 100 grand worth of debt or 50K worth of debt? And then Denise will be punching her numbers in going, yeah, that'll work. And then we work together and collaborate to be able to make sure that we can get people, moving forward. And there's people, how many people would you say would get stuck, and then we'd like literally just pushing them over the line, and they might think they're stuck at 5, but they'll get to like 10 in the next 2 years because we've structured the loans and the
I would say a lot of people too.
A lot of people?
Yeah, a lot of
Yeah.
people. A lot of because they do come with us with 1 or 2 properties, we obviously help them, grow that portfolio.
Mhm.
Sometimes it depends with the policy changes and the, like the
Yeah.
servicing calculator changes and everything. So sometimes they can get stuck.
Yeah.
So then we try other solutions. We try other banks. So
Yeah. And
There's-
if someone can't service with, say, ANZ or CBA, does it mean they can't service anywhere? Or
no,
what?
they can service with any other bank, like smaller
Cool.
lenders, or
Yeah.
you just need to give the right structure
Yeah.
to the right client. So every client is different. So
Yeah.
not necessarily structure A works for client B.
Yeah.
You know, so.
Everybody's position's different. No one here gives financial advice. Sometimes I err on some of the funny things I say, right? But
It goes out.
I just say funny things, right? But the strategy, I always say like the debt strategy is crucial. It's like it's very, very important. And there's so many people that I see that come to you that, you know, they might have a nice position of 3 or 4 properties. They've come to us, but then they get stuck and they can't do anything. It doesn't mean that their property's bad that they've bought. Like generally it's like I don't get people stuck with their loans. They normally come to us when they're stuck. People ask me, should I sell the property? And it's like, well, the asset's not a bad asset. It's just that you've bought the wrong property, the right property at the wrong time. And
or the structure would have been wrong when you apply for a loan.
Yeah.
Because we've got even clients come to us saying, oh, my properties are crossed, you know, and sometimes it's hard to move on when you have crossed properties are crossed. So we try to uncross them and, you know, make sure that we give them the right structure so they're able to move on until they can buy however many properties.
We actually, me and Rose had lunch with someone today, and we were talking about that the thing that brokers do that get the most, like, you know, we deal with lots of people and you know, with their loans, and then there's other people that deal with lots of brokers that do lots of loans, and I sort of had the ability to go and ask today the question of like what sort of things get people stuck, and you know, this person said about what brokers sort of do that get them stuck. So you know, fixing their loans, crossing their loans, having the wrong structuring to it, it's very, very crucial. There's people that have got you know, even if it's just buying, you might be able to buy 4 properties today. Like I see clients that can buy 4 properties, but after they buy the first 2, then they have to go to a different bank lender. If they buy the 4 today, then they're going to get stuck with not being able to pull out the equity. It might be better that they only buy 2, and then we wait, pull out the equity, and then take them to a different bank.
Yeah.
So I see that every day. What's your thought, like when you first started here, Dinisha, like you started, you know,
I was very young.
You're very young, and you know, what have you learned? Like, what sort of things like have you learned over the years? Like, what?
When I came.
This is a job interview, Dinisha.
When I came to Zinger, I actually didn't know anything about properties or, you know, or mortgage or like policies and what else? Servicing, and I actually didn't know anything. All I knew was I was a customer service. I call clients or book in clients for brokers, and then, you know, they will basically that's where I stop. Yeah. But
so you've worked your way up.
I worked my way up. Yeah. So so I slowly learned, you know, okay, why properties are so important here. Yeah. Like, you know, purchasing in Australia, you know, how does it help to grow your, I guess, like your life in future, you know, where, like, how does it help you later on in the future? So, so I learned on basically like how it works in the finance sort of side mainly, because obviously I was working in the finance side. So I learned on what banks look at, what do you need in order to service a loan, you know, reading the policies, working out the structure for, you know, each client. And when I was a broker support, which was helping the brokers lodging application to settle, I you know, speak to assessors, I speak to the banks, you know, why do they, for example, like, okay, if it's decline, why is it decline? How do they take the income from their end? What can we do to you know, you and I to be on the same page to make sure that the loan is approved? So talking to clients, learning how to build rapport with clients, that was one thing. So I've learned a lot actually, and I mean, safe to say I'm a mortgage broker now, so I think
You're a broker, you're an investor, you've been thrown in the end, you're like, go buy some properties, Dinisha, so you know how your clients
I've
live
been
off
thrown
of.
in the ocean and be able to swim myself. So
You've got good mentors around you. Rose has been a
definitely,
terrific
yes.
trainer and a coach.
We
and
have
mentor.
we have great teams and we help one another. We sometimes even if I'm writing loans, that doesn't mean I know everything in finance. So everyone help each other. Everyone put all give tips on how to how to make sure we have the best rapport with clients and loans
It's very stressful what you do, right? And this is something a lot of people don't understand, right? And as a business, like it's taken us, like we're talking about today, Rose. Like you've come on board, like you've been my broker for 20 years almost now.
Since you were 18.
Since I was 18. Well, I'm
I'm not
38
that old,
next
right?
year. No, of course not, right?
You're sweet 16.
Yeah.
You're 22 when you started writing my
Yes,
loans.
that's right.
Yeah. So you came on board with the business a couple of years ago to lead the business, but before that, like you actually mentioned today, like we've been in business now for what, 10 years almost now, or over
We started
10 years?
2012, 10 years.
So there's so many things going. I don't even remember when it
10
when it
years.
started, but so 10 years ago we started Zinger, and over the years, like there's lots of things when you start anything, right? Like there's things that you need to grow, things that you need to learn, things that you need to overcome. Just like someone with their property journey, they become smarter, wiser, growing, learning, all that. Starting business is the same. I'm learning all this stuff now with motels and stuff, which is way outside of my, comfort zone and knowledge base. But when we started the business, there was lots of hurdles that we had to overcome, and one of them is like managing investors, sort of all clients, just in general, with Zinger Finance, with their expectations. Because people will be like, here's my properties, I want to get a loan, I want it approved tomorrow, and the expectations is that it's going to happen. But I see the painstaking things that you go through that make you guys different to what an average broker would be out there. And I say average broker because brokers don't
Can I
do...
interrupt you one?
Yeah.
Sometimes we even correct the accountant's work. We have the financial statement that doesn't tally, and we go, hey, and go back to your accountant, this is not correct. So
Yeah.
that's how
So-
That's actually
we examine
true.
the.
So looking at basically, there's this thing, and correct me because I don't work, like a lot of people say, Nathan, you own all these businesses stuff, like whatever. I don't work in Zinger, right? But I know a lot of terminology, I see everything happens and all that. The one-touch applications where you push it and get it right. Rose,
First-
you're a platinum broker, yeah? Is that right?
I'm a
Right?
platinum broker.
So a platinum broker. How many platinum brokers would there be in the country?
For CBA, there's only 70, I was told.
70 platinum brokers. Rose is one of 70 brokers. So you don't get to become a platinum broker by submitting shit work now, do you?
The quality.
Quality of the submission. So if Rose just goes, okay, send me all your stuff and then sends it on to the bank, then the loan will take longer, there'll be errors, and then the level of support that goes to the broker won't be as strong. But because of Rose's excellent work and having the team that makes sure that we basically forensically look that people aren't doing bad things with the documentation, all that sort of stuff, and Rose picks up and the team picks up that if it says they've got this amount of income, this amount of deductions, that the ATO submissions from the accountants can be wrong. So we need to make sure that everything's spot on and that that no errors are there. So one touch, we don't want any, what's the word that when they come back, exceptions?
Exceptions.
Yeah, no exceptions.
So when exception is basically when the bank come back and ask questions
For more documents.
or more questions that we have to answer and all, which we try to avoid that. So we want to straight lodge, get it approved. So that's one touch approval.
Yeah.
So it might take you, I know you've got a client at the moment, Dinisha, we were talking about the other day, we got them to about 10 properties. And I see Patrick there said, hello lovely ladies, best in the business right there. You know the client, right? Because you're seeing Pat's name, right? So I asked you, like, what's the hold up? Because it had taken you like a few weeks to get that loan, like the client's like, I want the loan approved, I want the equity out. And I asked you, and you just said to me, Nathan, I've got two options. One is that we can get them the result that they need, or the other one is that we can push it through and they're going to end up with a worse result. And the result that you're trying to do is you're trying to make sure the properties and the loans stack up to get into the big four banks, and that they get a better, loan product and a better position, so they can get more equity out. If they get more equity out, they can go from 10 properties to 15 properties, instead of if they just go to a normal broker and they say, oh, we can refinance your loan or whatever the case may be, and they'll be stuck and they might get one more property in their position. So, and when I asked you the question, me and Pat were talking about it, it's like, great, you're workshopping, 10 different scenarios on that investor's position, which most people, you go to a broker and they go, no, you can't do anything. But you guys are literally, pulling it apart and looking at all options to make sure that
Dissecting it.
We don't give up easily.
Yeah.
Because we want every client to be able to do something and to grow their investment journey.
Yeah.
So just because one bank doesn't service, that doesn't mean we just stop giving up, right? So
Yeah. And a lot of brokers will go for lazy options. They'll say, oh, don't worry about that, we'll push it to 90% LVR, get you into mortgage assurance, then you get stuck with the broker and all that sort of stuff. I see you guys, like, literally, you write a loan 1 month for like 150K, right? And as a brokerage, what would be the average loan size, Rose, in the industry standard? I don't know.
Oh, probably 550 for, yeah.
550. If we're doing a loan for a purchase of 150, 200 grand, an average broker would need to write 4 loans to get the same. So you do 4 times the amount of work. And if you need to go get the equity out in a month's time, you're doing another loan, so we lose our revenue from that. And then you do the whole work again. You have to do new pay slips, this, rework, and then we don't get paid anything. And I see that, the effort and the level of detail for the portfolios to happen, because most brokers will be like, nah, it's too hard. They move on to the next big thing because they've got like a commission that they're thinking about, okay, I'm going to get the next person's commission and feed more people into their business. So the question that I've got for Dinisha and for both of you is, what sets you guys apart from other brokers that are out there? Without talking shit about them, because we know you better.
Look, as we mentioned, that we don't give up easily. So if client fails servicing with another lender, we look at different banks. We look at, okay, is there any additional information the client could give us to help with the servicing, or is there anything that, for example, like credit card, if they have a credit card, okay, maybe we can close that, or, to make it service, to give them a pricing discount. Sometimes we do that for our clients as well, to lower the interest rate a little bit. We talk to them, we explain it to them, so sometimes we update each other, making sure, okay, the client understands why the client is struggling, or what else? We always monitor the client's positions as well. So if we know there's a certain area that the market value has increased, and if we know the client has spot that, then we tell the client, like, hey, we've noticed this, would you like us to release equity? Because most clients that we have is investors, they purchase a lot of properties, so we want to make sure that we can get them at the right time and give them the right opportunity so they can grow their properties.
I was talking to one of your broker support staff today, who's actually still in the office working right at the moment, without mentioning any names. But
They'll know him.
They would. But I had a deal that I sent out 2 days ago, which was a block of units. It was 8 units for 500 grand, and it brought in like 2 grand a week in rental income. It was a pretty cool one. And I sent it to someone. They go, I don't know if I can do the deal. So I sent it over to Zinger and I said, hey, can this guy get any equity? What can we do? Whatever. And today, when we had Rose's first and second cake that we had for her, because we had 2 cakes already, and this staff member came to me and said, just letting you know that this client, I was able to extract $41,000 equity out of his property. And that's something that this guy doesn't know that he has it. I literally sent him an email with a different deal on it just before we hopped online, and there's something that we're proactive with, with the investors' positions. And most brokers will be like, I don't know if you've got equity. We've fixed the loan for 2 years. It's cross-collateralized. Let's not do that. but we're continuously looking at options of being able to do so. So that's really cool. And one thing that I noticed yesterday, I was having a chat with Peter from Zinger, one of our other brokers, which is also Rose's son. And showing my age, I remember when he was like, I was going like this, he was like a baby, he was like 5 years old. And now he works with us, and he's got a portfolio, and he's, you know, helping our clients and all that stuff. And looking at the a deal that I was talking with him about yesterday, there was a client that stuck with servicing, and he had equity, and he had some cash. So I think he had like 50k cash, and he had 220 grand in equity, 222 grand equity, so 50k cash. And I was helping him buy 3 new properties, and he's like, I can't buy them, and his servicing didn't stack up. And Pete and I were workshopping this investor's position, and we're like, well, one property was 120 grand, one was 100 grand, so that's 220, and the other one was 290,000. So if we went in and got a loan for the 290,000 one, it wouldn't stack up. So the strategy that Pete had mentioned was, let's buy the first 2 properties cash, 100 and 120k cash. The income from them will boost the servicing, which will mean that the money that's left over, and there's more equity there to get as well, we could then service to get that 3rd purchase. Well, most people will be like, okay, we'll just buy 2 purchases, that's it, or we'll buy 1 purchase. You know, Pete's been able to push this person along to get another 3, and possibly even more. We don't know. But
See, with investors, right, we take into account the servicing, the equity that you can release. So it doesn't fit in all lenders, right? Your criteria, your situation, but we will never give up on you. So if this bank doesn't approve your loan, we move to another lender, and we move to another lender, and then we said, okay, hold back on that property. We'll do this first until we can release that equity, then we purchase another. So we're not just there like you said, oh, I want to purchase. I said, okay, you purchase one. We're really maximizing your servicing, maximizing your equity to ensure that you can continue your journey. Now, down the track in 3 months' time, that doesn't mean because you were having a problem when you did those loans previously, it doesn't mean that you may not be able to buy in the future. We monitor those properties, right? And if the valuation goes up, obviously the rent goes up as well. There's most often happens because sometimes the rental that we use when it was already occupied, you can't change the rental, and then when the new lease changes, it increases the rental. So those things they might be just small things, but it does count.
And on that note, I was talking to one of Denisha's clients yesterday. That's okay. And I sent you an email. He wants to buy his principal place. You know who he is. You know who it is. And when I was talking, I was like, by the way, have you increased your rents recently? And he goes, yeah, I pushed them up. One of them went up by $100, and one went up by $30, and some went up by 10. And I said, how much do you reckon all up? And he's like, oh, it's gone up by about $300, $400 a week. And I was like, great. That $300-$400 a week is extra income. So, you know, you need to make sure that you've got the right team. It's not just getting the right property. It's not just getting the right rent. It's not just getting the right finance. If you don't have the right income, then you can't get a loan. If you don't have the right finance, you can't get a property. So it's very interwound.
Sometimes it may take us time, but please note that the time you feel probably, oh, it takes longer, it took longer, but you didn't realize that your deal can be complex. It didn't fit into that. So we use another calculator. It takes a lot of time. And then we ring the bank, we ring the BDM and said, can you help me how we can get it over the line. So, you know, it's not like simply like, because when you become a professional investors, servicing is your challenge, right? So you have to bear in mind that, you know, it may take time, but we don't give up on you.
And an average investor will thinking about themselves and what property they want, right? I hear people say all the time, I want a house, I want this, I want that. When our investors come to us, it's not about what they want or what I want as an investor. It's always about what does the bank want from me, and being able to provide that from the rental income and from the deposits, and being able to get the equity and whatnot. And one thing I see stand out as you ladies are talking, is that one thing I hear, it's been the last 2 years specifically more so than ever before in the business. So in the last 2 years out of 10 years, I hear you guys collaborating, right? If you've got a client that has an issue, like I'll hear 3 or 4 brokers going, "Hey, I've got this issue here. What do we
Yes.
do?" Right? It's constant every day, right? And there's a lot of noise that comes from the team because they're sharing like their problem, and if they're struggling with a bank, one of the other brokers will come in and say, "Hey, I've seen that we did this
Yeah.
here," or a broker support
Mm.
will say, "Hey, what about if you try it this way? Because I know that this bank doesn't have that policy because the banks are continuously changing their policy. We have access to what 40 or 50 banks, I was told today, that we can lend through for our investors. So it's not just one bank, and that's
Yeah.
it. It's workshopping that.
And don't underestimate our broker support team.
Oh,
Yeah.
our brokers. And also,
Seriously.
you also have to remember, like, because there's 12 of us, so if we have this difficult deal, I would say probably, can you ring this, can you ring that? I can just, and everyone help, right?
Yeah.
To make sure, like, we've covered every basis, because we don't want declinal. I mean, most of our loans are at probably 98% approved, 98.5% approved. The only reason that if there's a decliner, there are things that we could not find out
Yeah,
from the interview with the client.
yeah. Or things that weren't disclosed, someone trying to be
Yeah.
cheeky,
Or
and
it
it's
could
like,
be internal
Internal
scoring,
scoring
Yeah.
from the
something
bank
that
itself.
we can't
Yeah.
help. Yeah.
yeah. And I've got a question here. One of my other questions is, what surprised your clients the most about being a client with Zinger Finance? Like, what do you think would surprise them on a daily basis that you come across?
In my experience, or in like my clients,
Mhm.
they are surprised with the amount of equity they have.
Yeah, and the servicing as well.
The
I mean,
servicing, yeah.
Mm.
That we're able to, no matter how many properties they have, if they have 5 or 10, we're still able to give them more money to borrow. So
Yeah.
clients
So-
always come back to us, as soon as it settles, like a month or 2 months later, they'll be like, hey,
Yeah.
equity, please release. Not just clients,
Maybe.
So,
But we literally here at Zinger, I'm going to choose my words very politically correct, right? I'm going to choose very politically correct. But I guess in essence, we have the ability to, because we are lending, when money gets lent into existence, I'm going to explain and put a disclaimer before what I say, right? When
Yeah.
you borrow money from the bank, it's being printed into an existence. They write the loan and they give you the money, and it's being created, and you're getting a asset to the liability to the bank, which is the asset to the bank is your liability, which is the loan, and they give you the money. So we here at Zinger, like, we understand how to print money, right? When I say printing money, and that's, a lot of people think, oh, I've got to go and work and save 5 years and get a deposit for 50K. Rose mentioned at the start of tonight's session, the clients that come in, they might have a house that they've been living in, and they're like, I bought my family house, got the roof over the kids, we've got 2 dogs and 2 cars and 3 kids, whatever, and the ability for them to be able to, not have to save and put money out of their pocket because you've identified the opportunity, going, hey, there's some equity. Yeah. So cool.
and often, there are clients that I've spoken to, and they were saying, "Oh, my broker says stop buying properties, just settle with these." So it didn't in sync with their goals.
They clearly
So
don't want to make any
whereas
money.
But they don't know. They don't know.
We're more encouraging.
Yeah.
Yeah.
If you were to recommend Zinger Finance service to your best friend, what would you say?
I'm here. I'm
No, if
working
you
in
were.
My best
Oh,
friend.
if you were saying to your best friend,
Just being sure.
I know.
what would you say? If you were. I know you're saying you're the best friend.
Of
You're everyone's
course, I
best
know.
friend, yeah.
I need to make a joke in
I
order
know.
to be comfortable.
I know you're shy, you're great at writing loans, you're not so confident being in front of the camera, but what would you say to, someone like, what would be your thoughts of why someone should come to Zinger if it was your family member, if it was...
Okay, so we just want to make sure that when you or if I recommend, right, I tell them that you are in a safe hands with Zinger Finance, because not only we look at your servicing or getting a loan, but we also look at your goals. So if your goals, you say, I want to get 10 properties in 1 year, then when we do the servicing, we just don't look at that particular time. We try to, to be able to make sure that they are able to service for more in order to meet their goals. So if they can, let's say with CBA, they can buy 2 properties, then I'm 90% confident they can buy 1 or 2 more properties. So so it's just not, hey, I want to get a loan, and I'm like, or yes, I'll give you the loan. I'm like, hey, be with us for a long time, we will help you, we will achieve your goals, and making sure that we are also, I guess, honest with the client. If they end up can't service, then we tell them right away. We don't dilly-dally,
Being candid is very important.
Very candid. And we tell you why. Like, why is it not servicing? What can we do? What can you do to help improve your finance position? So sometimes when you come to us, it might not be right away. You can say, you might need to earn a little bit more in order to borrow this much at this time, at this period of time. So if they come back in a month or 2 months' time, that sometimes it could help them get more, more properties out of it. So, and I think the last thing, as we've been saying in the entire Facebook Live, is that we don't give up, right? We never do. So, just because you fail servicing with one bank, that doesn't mean we let you go. We always try our best to make sure that we give you something, to make sure that you start a foundation, and then we hold hands together and go from there. Basically. So
can I add to that as well? With our team, right, if we do your loan, there's always a broker, and a broker support, at least 2 persons would look after you. In the event that one of us is not there, or you can call the team, and they will always know where your file at, because they're all documented, and they know exactly at what stage it is. Now, if you go to other brokers, there might be a single broker. I mean, if they're not there, they're uncontactable, then you get stuck.
And one thing that Dinisha said as well, like at this, one of your first points there as to why, like, it's not about, like, someone comes to you with 100 grand and they can service for 300, 400, 500 grand. Sure, they can buy 2 properties today straight away. They could probably buy more. They may not buy as many, whatever. But let's say they can buy 2. You don't look at the first 2 properties and go, okay, cool, let's get a loan for that. You've got to map it out and sort of draw it up and go, okay, this is the first 2. How are we going to get to number 3 and 4? We need to make sure that number 1 and 2 gets you to 3 and 4.
Able to get through your 3rd property. That's right.
It's a strategy.
And also, we are the best. We'll just put it out there.
And if you've got a rat's tail like me, Dinisha can do a good clap. What do you use to determine how much a client can borrow? There's a lot of people here that would be thinking, they can't borrow or whatever. What sort of things do the banks look at, and how can you determine
Some
that?
clients always just think it's income, but it's actually not that case. They look at everything. So they look at your incoming income. If you have any properties, they look at rental incomes. If you have investment properties or principal place, naturally you would have mortgage, all right? So then we would also have to take the liabilities, the repayments on, whatever your interest rates are, and however much you're making repayments, we take that into consideration as well. Any other liabilities you have, so personal loan, credit cards, overdraft, or car loans, student loans, so any commitment.
Kids. Wife not
Kids,
working.
yes.
Wife not working.
Wife not
Kids.
working.
Husband not working.
Exactly, yeah.
No one working.
No one working. Bank won't take that.
No, I just threw it out there just for a laugh.
And not also that, they also look at your expenses. So if you if you're married, you have 2 kids, then we need to look at how much you're spending for your kids and for yourself. If you know, because each bank have their own threshold living expenses, and if hypothetically you are paying private health insurance that's actually outside of him, so we also need to consider that, and that sometimes can bring down your serviceability. You know, it just depends because you choose to pay, right? So
how much you spend on Uber Eats,
how much you spend on Uber Eats,
but also the expenses on top of the hem,
yes,
like private health fund,
life insurance,
private school fees.
No, private school fees is included in him, but
Oh, is it okay?
Child maintenance,
Child support.
Child support.
Yeah.
That all comes into play. Yeah.
And I noticed, like, when weighing up those things, right, like a lot of people, and this is something that I heard, two parts to it, right? One, I see quite often where people will go to their bank. They're like, when I was a kid, I got a Dollarmite account, right? It's actually little money boxes up on the side there. I think there's a Platy Bank, right? There's a Platy Bank. Yeah, it's a Commonwealth Platy Bank, right? There's little different ones. Anyway, I digress. You could get it. You go, okay, I've been going to the Commonwealth Bank, I've been going to Westpac, I've been going to ANZ, NAB, whoever it is, right? And you think, I'll just go to that bank and get a loan. But the bank has only a certain amount of policies, right? Like each bank's policies are different. And I noticed like CBA's a good bank that I see people get loans with to start off with. That's like a beginner's bank, right? People start off there, but they're not going to get their whole career at that bank. They're going to have to go to multiple banks if they want to build a large portfolio. But
I would actually say CBA is a bit one of the toughest bank.
I just mean like the products and stuff.
Products.
You get like, yeah. Like there's much easier banks. There's banks that, you know, there's some lenders, depends how much higher you want to pay in interest rates, right? We know banks will go, we'll give you 10%, 12% interest, 15%, and don't worry about anything, right?
It's shocking.
Yeah, but I guess, like if you go to CBA and you said it's bad, like I said, some of the products are good, they're equity releases sometimes are good and stuff like that, but you might go to CBA and I might be going in there and saying I've been banking with you for 20 years or 30 years or not 40 years, 37 years, whatever, and thinking I'm doing the right thing by the bank, but then they say, well, you're earning too much rent, right? Your income's, I don't know, 100 grand a year and your rent's 100 grand a year, and I know you've done very well by buying a positive cash flow property that's 100 grand purchase and gives you 50 grand a year in rent, but we're only going to cap it at 6%, we're only going to take 6% in. So the other thing where I think people may get stuck is that they go to their bank or their broker's only limited to what they can have, and you might need to spread that out across 4 different banks to get them. Yeah. So
sometimes when they go to the bank and if they buy 2 properties or something, they don't even know that it's been crossed.
Yeah, I see it so much.
Yeah,
I see it so much. I was talking to someone today, Rose. I'm just going to write a little name here without Rose saying it. Yeah. And I remember speaking to him 2 years ago. And I remember having the chat.
I think he's one of my success story.
He's one of your success stories, right? Yeah. And he was screwed. His broker crossed him up, or his bank crossed him up. His whole position was shit. And you took the time, and he said it's taken him like 12 months to get all that organised and restructured properly. The valuation stacked up because he had some properties where the valuations were negative equity. They were all cross-collateralised. He couldn't get himself out. It was like one of these articles where people feel like they're in a mortgage prison because they're trapped. But you've been able to, over 12 months, 18 months, however long it's taken, be able to free him, and now he's buying a property with us.
Yeah.
So,
I think what we do with Zinger as well, right? I'll just going to add this one. For example, at that point, you're not able to borrow. I always put a strategy. I said, okay, moving forward, do this, do that, right? In 6 months' time, come back and, let's see how it goes. And often, it makes me happy to see, like, they've done exactly what I've asked them to do. And
it has worked.
Yeah, it has worked, right?
It has worked.
Yeah, so, you look at one of this client that Nathan has mentioned, that's 12 months of... really, however, he always contact me and said, oh, do you think I should do this? So look, I'm also available if you just want to talk and say, like, do you think I'm doing this now? Is it am I in the right path? So
sometimes a client called me like out of the blue and like, hey, I want to open up a car loan, what do you think? You know, like they actually ask you
Yeah, they
questions
do
like,
consult,
oh,
yeah.
do you think if I open a car loan, would that, limit my
Impact, yeah.
serviceability? So then it's just like sometimes it's nice to build that rapport as well. So then they actually trust you and
Yeah.
they know that you're doing right
Yeah.
for them. So
And we do it a lot to the clients as
Yeah.
well. I mean, even before they complete their tax return, right? They would say, "This is a draft. Can you just look at it
If
to
it's
see
okay,
if this is
yeah.
okay?"
Yeah.
Because there's like dividends there, director's allowance that may not be, the bank doesn't assess it as 100%, right?
Mhm.
Compared to salaries.
Rose, I've got some questions for you now. I'm good with the questions today, right? I've actually got a list of stuff here. So we've talked about like success and client success and what people do and stuff like that. What do you define? What does your team define as success? Like you've got a dozen brokerage staff, and we're trying to get to another dozen in the next sort of 12 months. We're talking about that today of
Yeah.
growing the team, so we're doubling the team in the next year. What does your team define as success?
I think we define success in terms of the loans that are difficult and we're able to get it over the line. We define our success in terms of the ratio of like approvals, right? In day to day, and for us, look, if a client is happy, we're more happy. The feelings of getting that approved, you should have seen the team. Yes, we get it approved, and I mean, and to be able to help the client build their portfolio, that is, I mean, if you look at it every time, and I go say to say Denisha, look at this client. I've only started with one, and now look at seven. I mean,
Yeah, sometimes I'm shocked myself,
yeah,
like
that,
I
I mean,
really
that
think
is
about
for
it.
us. That is just, like we get something out of it, right? Like,
And it's not like, because we always get approvals, it's not like we are used to it, like, oh, this client's approved. We actually cheer.
gee, like,
Like,
we
oh,
still,
this client is
it's
approved.
so I think we measure our success in terms of how the performance of the client's portfolio. Like,
Yeah.
I think that, and we were part of that journey,
Yeah.
and also like be able to basically just, there are clients there that if you look at from where they were before, and uplifting them as well, like it boosts them, and I think that is success for us.
Yeah.
Yes. And also the team we have currently, I think that's one of the biggest success. I think without the current team we have, I don't think we won't be able to be where we are today. Honestly, you need to have the right team. Who help each other. Who, if a client is stuck, as what Nathan and Rose said, like if just because my client is stuck doesn't mean I'm the only one that's looking after my client. We have Rose, we have Peter, we have all the other teams that come in and they try to give the best solution that we can overcome that. So I think that's also one of the success we.
And you're right with that. Like you're only as good as the weakest person on your team as well, right?
Yeah.
So we need to make sure we're uplifting everybody. So there's like we have our team internally, but then like as an investor, you have your team. If your accountant's letting you down, if your agent's letting you down, if someone's letting you down, then you're getting screwed. I've got another question. This is one I just made up just then. What would be the smallest loan you've written, and what would be the largest loan?
Oh my
Yeah.
god,
The largest, the smallest, and the largest home loan
The
you've done.
smallest loan was 68.
Yeah.
Yeah.
Yeah, 68,000.
That's for a purchase, yeah?
Purchase.
Yeah.
It was painful.
68 grand, right? How many brokers, like, so just back what Rose said, so that client we talked about, it's taking you 12, 18 months to get him his position all fixed up, 160 grand pre-approval, right? How many brokers would spend 12 months trying to get someone 160k?
No, they would
right?
not even.
They'd be
they
like,
would not-
give me $1 million loan,
Yeah.
get out of here, whatever,
they
right?
wouldn't even want to know them.
It's very, very different. So when people think about what we do differently here at Zinger, like that's, it's helping people in their journey getting to where they want to be. What would be, like some people be like, well, I've got a loan for $1 million I want to get, not a $60,000 loan. What's the largest size loan that would write on the other
Largest,
side?
as in like one application?
1.5,
Is that what you're?
1.7,
Yeah.
1.7?
Yeah.
Yeah.
Yeah, 1.7.
She got a 2.5 that you're doing at the moment, actually. So
Yeah,
you got a 2.5. I know that one because the person I was talking to about it the other day.
Mine's lowest. Mine's I think 1.5.
1.5.
Haven't reached 2.5
Yeah,
yet.
There we go. Got a goal for you, Tanisha. Next time we'll bring that same client back.
Same client?
Yeah. Cool. And what would be the biggest, this one's for Rose, what would be the biggest challenge to achieving someone's success or achieving the success? that we're
I
talking
think
about?
the biggest challenge at the moment is serviceability, right? How to service, capacity to service. I mean, if you look at a lot of banks now, let's look at ANZ, for example, the hem, like they've increased the hem to 500. So
Yeah.
obviously because goods, and, they're getting expensive.
Expenses have increased.
Now,
Yeah.
that is our servicing is our biggest challenge. Now, if valuation of the property is not as bad as the servicing, so the number one challenge is servicing,
Mhm.
valuation maybe. Interest rate is not a challenge for us because most of the investors, right, they always gonna be like, I think we just have to educate them. Like, yes, the interest may be high as long as you are able to service. You're not gonna be in dire strait. Then any time is a good time to purchase a property.
Yeah.
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 So, as of course, comes the servicing and what have you. But we are now with Zinger. We have so many lenders that we use, right? So it may not fit in the 4 lenders. We'll put you first to the second tier lender. They're still very good interest rate, and we can pull you out there and back to the main lender when your position changes.
Yeah.
So, it's every
You're not
bit-
stuck forever.
Oh, you're not stuck forever.
Yeah.
You're not stuck forever. And also, like, we always negotiate for interest rates.
Hmm.
We negotiate for interest rates. So,
Very important. Even just a phone call to
Yeah.
someone's bank, right? And I think that's something that people need to look at in this time, right?
Mm.
Like interest rates are rising, people are concerned. Like the ability, like if you're not comfortable with your position, reach out to the team. I think there's like a link or something you can book in for
yeah.
like a free chat with one of the
Mm.
team. You can do that. You can reach out to us, send us a message wherever you're watching this from, send us an email and we'll go from there. So the email for Zinger Finance is info@zingerfinance.com.au, info@zinger, zinger, finance.com.au. Zinger, just like the burger, but not as, no flames around us. Should people be fearful of interest rates? Here's some questions I got. Should people be fearful?
Well, personally, no. Why would you be fearful about it? Okay, the term of the loan is, say, for example, 30 years. Are you telling me that during the term of the loan, you're not going to get a high and lows of the interest rates?
Yeah. So if it
Yeah.
goes up for 6 months or 12 months out of 30 years,
Of the
it's-
yeah,
yeah.
and then it goes down again, it goes up again. So would that stop you from from achieving your goals?
that's a
And
good
it
point.
shouldn't.
It
That's a good
shouldn't.
point.
Yeah, it
Shouldn't,
shouldn't
you know?
stop you. That's a challenge,
Yeah.
right?
And
Yeah.
we're also very responsible. We're not gonna lend you, or we're not gonna process your loan unless you're able to
Service.
to service. I mean,
Yeah.
the bank protects you from that as well. Make sure that you're comfortable in making those repayments. But
And the banks are extra safe. Like they
yeah, the
put
buffer,
2%, yeah, buffer.
3%
So,
3%
and
buffer.
so
Exactly.
I mean, how much buffer do you need?
And-
Yeah.
yeah.
And then even with the hem, I mean, my goodness me, it's almost twice as much as
Yeah.
you know.
What is people spend?
Yeah, that's right. So, I guess, guys, interest rates should not. Yes, we consider interest rate. Obviously, every time we do the loan, we consider it, but it shouldn't stop you from, buying a property.
Look at Nathan.
Look at it.
Imagine how many people would be sitting here today that are so upset that they didn't buy in 2020, right? There was good reasons, right? We've never seen a war like we're in at the moment. We've never seen the lockdown. We've never seen people losing their jobs. We've never seen Centrelink queues all around. We've never seen people just literally go, okay, everybody you're sacked, get out of my office type scenario, as what we see back 2 years ago. And people were sitting there that were on one side of the fence and going, oh, this is too scary or whatever, and they're scaredy cats and they didn't do shit. And then you look back now and people will go, well, there's an opportunity, and they took action and they've had cool growth. and then you look in the future and imagine how many people be scared about, oh, the interest rate's gone up, and then, you know, worried about the interest rate going to 1.5%, guys. It's really scary, right? It's still cheaper than what it was 3 years ago, right? It's cheaper than what it was 7 years ago.
Yeah, it was actually like
Yeah.
what in
It was-
2017.
It was
the
still
rates
1.5.
were-
Yeah, actually, it was higher than that. It was,
Yeah, it was
it
higher,
came down
yeah.
in 2017, and it stayed till about 2019. So it stayed
Yeah.
for. It was actually
Yeah.
2016. It was higher, and it
Yeah.
was flat,
It
and
was
then
like
down.
7.25, somewhere around
Yeah.
that. I
Yeah.
remember when I was
Yeah.
doing loans.
And
with
look,
CBA.
there's always the upside of it, the tax benefit of having the higher interest rate, you know.
Yeah.
I mean, sometimes you have to be philosophical about it.
I like the high interest rate because A, they're going to come back and have to reduce them later before everyone goes broke. But B, it gives you the opportunity to push up the rents, right? And the rents go up, the rates go up, the rents go up. Well, one thing that's fixed is generally the rents. They're not going to go, oh, the interest rates have fallen. Like you've seen the interest rates fall over the last 3 years. But the rents didn't fall, they went up actually. So at this time, rates are going up, pushes up the rents. But when the interest rates come down, the rates come down, but the rents stay up.
Yeah.
So, yeah. Should you fix your interest rates?
Oh,
It's a question.
should
the
I
current
fix
market.
or should I not, right? Now, it's probably too late now because the difference between a variable and a fixed is probably 2.2.
Yeah.
Now, if you're going to fix it now, more than 2.2 more than the variable, that's just paying the high interest rate from the onset. Whereas if you're in variable, it may take you a year and a half to be in par with that fixed rate that you're getting, right? Because the variable, even if they increase, they're not going to increase in 2%, you know, next month. You could probably, you know, distribute it over a year and a half.
Yeah.
So, yeah.
And
it's
I
it's
think
gonna be
sometimes
expensive.
it also like
Servicing is an
stuck.
issue.
Yeah, you get stuck as well if you want to continue to purchase more properties, and when you fix your loan, for example, 2 years, and you have the perfect opportunity to buy a property within that 2 years, but you can't get out of the contract, you know, and so then you miss that opportunity. So it really, yeah.
And I'll give you another one as well. Like if you fix the interest rates now, like people are scared, but rates are falling backwards. So I've seen some articles, and I'll bring those articles next week. Rates are going down with some of the big four banks, whether they be fixed rates or variable rates are actually coming down for new clients.
Well,
So
their National Australia Bank and Suncorp has lowered their
Yeah.
variable. For
Variable.
owner op, yeah.
So interest rates are coming down. People are going to run out and get scared. All the people that are not watching this Facebook Live, they're watching Channel 7, Channel 9, Channel 10 News, whatever, getting their programming. They're going to be watching this, seeing all these negative articles and going, oh, I better, you know, fix my interest rates and they might go up to 25% like they did in, you know, whenever.
Maybe you should have channel B.Invested.
Well, we have that. We're here. Yeah, we're delivering real stuff, not
Every
fake.
Tuesday.
Yeah. How can people harvest? This is probably the biggest question for newbies and people wanting to get started. How can you harvest your equity to grow your portfolio?
I did mention it from my last Facebook live was that, okay, if you look at it, when you purchase a property,
People are calling Rose to say happy
To wish
birthday.
happy birthday.
when you purchase a property, the likelihood that it will come as the same as the purchase price is probably 99.5%, right? Unless it is inflated. Now, if you have, the bank would lend you, this is the purchase, the bank would lend you either based on the valuation or the purchase, whichever is lower. Yeah?
Yeah.
So that's the first thing you need to think. If I were you, this is just my opinion, I would put probably to say first MAC or second tier lender where they do the full val.
Mm-hmm.
And then obviously the lending will be based on that purchase price.
Mm-hmm.
Now 3 months later, I know that you bought it under market. I would probably suggest maybe you can refinance it, move to a CBA,
Bigger
AZ,
lenders.
and you know,
Yeah.
you could probably be up with 100,000.
Yeah.
So, and then
You take the equity and
you
go
take the
again.
equity, and then, yeah, I'm not gonna mention it here, but we do have a lot of strategy in place in every deal that we make. Yeah.
It's important that you contact Zinger.
Yeah, why do
Got-
you think you can buy like 6, 8 properties, right? It's not like, we didn't put any effort in it. We do put a strategy in place.
And it's a proven that we've done it, because it's just not one client
Yeah,
that has 10
we have a
properties.
lot
It's
of clients,
so many
I mean-
clients that has 10, 20. We
Yes,
have
yeah.
even more than 20, so it is.
I feel like I
It
feel
has
like
worked.
I feel like I've got like I feel like
this
watching
is
you
such-
ladies
yeah.
talk. I feel like
Maybe
wow,
Nathan,
like
you should go. We
I'm
should.
like I'm just like it's like the biggest advertisement ever. It's like we've got 10 properties, 20 properties. Like I didn't even talk to
You
them. I
remember you asked-
literally
you
5
asked-
minutes
you asked
before
me,
we
like,
came
how
in.
how do I measure the success for
Yeah,
Zinger?
yeah.
It's
The results.
the result of it. I mean, it brings me joy every time. I mean, it sounds like cliche what we do, and as I said, I shared it with Dinisha. I said, so and so has been
Rose starts
approved.
dancing.
I do the TikTok. Yeah.
You
yeah.
do TikTok videos?
No, I don't.
You do TikTok dances like the TikTok.
Yeah,
okay.
yeah, I love
Okay.
TikTok. Yeah, so every time
I haven't got on
it
TikTok.
brings me joy, and it brings me joy every time the client gets service, and then just look at, because we do that. You guys, you probably see us sending you the property list, the list of your properties, and we look at like, okay, this is how we monitor, right? It was valued, and and we go like, hey, so such area has increased, and say, oh, wonder which client do we have that has bought in that particular area. So we have those,
We have data.
And,
data,
and when we found that that particular suburb has equity, we've spoken to all the clients that have.
Yeah,
that
we
property
contact
and able
you.
to release
It's
equity,
not like because we've done your loan, we're finished with you. No. We want you to continue your journey as
Never
long
let
as
you
you
go.
can. Never let you go. And and some clients are so easy to work with because we're like when we put a strategy in place, they like it, and then they help us also like providing documents that we need or whichever to make it to make it serviceable, or whichever we need to get the finance.
Exactly. So come
We
to
get so
Zinger
excited,
Finance.
Nigel, every time we
I
talk
know.
about clients. Like,
It's good. It's good.
You have seen some of this.
I've got a few questions. We'll run through
Yeah.
a few questions. We want to try and keep this to an hour because Rose's got to go and enjoy some family
Birthday,
time with the
yeah.
birthday with the family. You can take the cake with you home and enjoy some
That's
more
for
cake.
tomorrow's
Tomorrow's
morning
dessert.
tea.
I've got a few questions here. I'll answer a few of myself and I'll get the team to answer a few. So Sam asks, hey Birchie, the Greens are trying to enforce a legislation of a 2-year rental freeze. What are your thoughts? A lot of people have asked that. I've seen that question trending as well in the comment section tonight. I'm not concerned one bit. The Greens are really irrelevant, and any Prime Minister or political person is irrelevant in my opinion, due to the fact that how many times do you see that the Labor Party tries to say, oh, we're going to scrap negative gearing, we're going to do this for investors, we're going to do that. Whenever they touch tax, they've got to get it passed by everyone. No one's going to get that passed. So let's assume that they did freeze it. What is it going to do? It's going to mean that some investors get pissed off and sell. It means that other investors, when they get their chance, they're going to push the rents up even higher. It's going to put a higher pressure into the rental market. But they have to get that passed. And I'm still waiting for them to scrap negative gearing, right? That was a big thing a few years ago. They wanted to scrap negative gearing. Well, they haven't done it yet because they can't pass it, and it's just a way to get them in the media, to get some talking about them, and here we are talking about them, giving them life, and I don't like to give things life that don't deserve it, so that's my view on it. But I will make a video. I've just made a little note here to get a video made on that into more detail, but that's my thoughts on that. Melissa said here, I had our appointment with Mike this week to do our super, so we'll be looking forward a property when that is set up. Melissa, let us know when you're ready. Reach out to the team, whoever your investor relation person is, whoever your finance person is. We'll see what we can do and get that happening for you. Lecky said, hey Nathan, what is the process of buying a property with a super fund? good question. There is financial advice around that, and I can't go into that sort of detail, but I do have the right people that can give you the specific advice on that. When it comes to buying a property in your super fund, if you've got, say, 200 grand, you can have 200 grand in your industry super fund losing money. You don't know what they've invested it into. You don't know who actually has their hands on your money. If you think about it, it's really, I see how it works, and I think about it as disgusting as Wolf of Wall Street. So, instead of having these drug-fueled parties that they have on Wolf of Wall Street, it's basically a whole pile of communists there managing your funds, which is, not the best. If you set up a self-managed super fund, you could take that money, to say you got 200 grand in your industry super fund, potentially earning you a 3% yield or a 5% yield, and they take out all their fees and you might be negative 5%. You could technically take that 200 grand and buy other assets. You might be able to get loans against it. You could possibly get a 500 grand loan against it, have cash. There's all these different things that's why I'm just talking generally here, no financial advice. But you could possibly have, instead of 200 grand, you could have 700 grand in total assets, because you've leveraged it and got a loan against it, because you can actually borrow against properties within your super fund. And then, therefore, if the property goes up by 5%, you've got 5% of 700 grand, not 5% of 200 grand, and it goes like Bitcoin in your super fund, whereas your property portfolio and other investments that you put into your super, you can control that. If you want to sell it, you can sell. If you want to buy, you can buy. So you need to speak to someone special on that. You can reach out to my team, just flick us a message somewhere, reach out to your investor relation manager as well, Lucky, and they'll put you in contact with the relevant people. Lydia said, we'll be coming soon, Nathan, just waiting for the pre-approval. Rose, we're an expat couple and I can't go to another bank to harvest equity on paperwork. Only certain banks except expats. We're looking forward to buying with Birch, and so glad to have Rose to be able to help us. So we will be able to get you in the right direction. We help lots of expats. Matt said, I'm in the 2%. I don't know what that was relating to. We must have said 2% beforehand. You rock, Dinisha. Rose, you're a legend. That's Lydia. Elizabeth, please pass on thanks to Rose. Helped build the portfolio from zero. She knows how much within 1 year. And Genevieve is amazing too. We've got Katie. How do I contact these lovely ladies? There's an email address in the message box, which is info@zingerfinance.com.au. Reach out. I think there might even be like an appointment you could book in there potentially. So you could potentially find it in the message box, or just email the team at info@zingerfinance.com.au. Lisa said thank you. Jazz said Dinisha is the best. Lots of love.
Thank you.
You are doing their loan at the moment. What is HEM? Brett asks. What is HEM? HEM.
Your housing expenditure measure?
Yep. Well, there we go. Household expenditure measure. Sam wrote underneath it. HEM stands for household expenditure measure, and basically has the answer there. So thanks for that. Lydia, great team. The key to any success is Zinger rocks. I need a small loan. I need any loan. Lisa said, always ring the banks to negotiate my interest rates lower. So there is different strategies. So you can call them up once you settle the loan, you own the property, and say to the bank, I want to renegotiate my rate. Can we do anything better? Otherwise, I might refinance to another lender. So there's different strategies. The team at Zinger will push those rates to be the lowest that they can, but then it might be, that it's... Actually, I just realised something I need to do. Meanwhile, I was saying that, but it's important to go and to do that. So, hey Denisha, Denisha's the best. Happy birthday, Rose. Zinger Finance better than KFC. Zinger Burger. We have 11 properties thanks to Zinger. Hopefully, number 12 being approved this week. Go, Lisa. Nikki said, happy birthday, Rose. I'm confident Zinger can get us to 10. Katie said already done. Thanks, Katie. Thanks for your support. Rose is too cool for school. So, but thanks a lot for tuning in, guys, and we're going to end it there for this evening. Once again, if you do want to get in touch, info@zingerfinance.com.au. We've got Rose, we've got Dinisha here. Rose, thanks a lot for spending your birthday evening. I didn't know when we booked this in that it was your birthday today, but thanks a lot for that. Go home, enjoy time with your family. Thanks a lot for everyone for tuning in, watching, and I'll be back next week, and I'll be talking about WTF happened in 1971. Catch up soon. Bye for now.
Good night.
Good night.
Thanks, ladies.